Alright, what's up guys? This is Taylor, and I'm doing the free video for Wednesday, January 24th. So the last time we spoke was on the 17th, which was that candle right there. And we talked about having a setup, the setup being the daily squeeze. We had a level, the level being the 21 EMA. The only thing we didn't have was a good trigger. A trigger for a push off that 21. The following day, the 18th, we got the triggers. So down here on the hourly chart, you got your big three buy signal on the 30-minute time frame. You've got more buy signals in the 15-minute, the 5-minute, everything aligned for a push higher. So that, of course, triggers a daily squeeze, and today we've hit that target, the big 4,900. So now the million-dollar question is, do we have more gas in the tank? Or is 4,900 going to be a spot where things take a breather, a little bit of a chill pill, and potentially even pull back a bit? Dare I say it, pull back a bit. Now, for what it's worth, we got the scoreboard here for the S&Ps and the QQQ. Bullish as it gets. The monthly chart, the monthly, the weekly, the daily, the 4-hour, and the hourly, they grade out as a perfect 10 out of 10. So none of that points towards the end of the rally, a big pullback. The one thing worth considering, we are a little bit stretched. That dotted green line, that's measuring 3 average true range moves above your 21 EMA. So you've got your daily chart smooching 3 ATR, and then even the weekly chart smooching that +3 as well. In terms of probabilities, this would typically be a decent spot for things to trade sideways or maybe even pull back a bit. I think the key for tomorrow and the key into next week, how can we handle the first pullback here to the hourly 21? Which you got most of that today into the close. The key here, can we hold structure? Can we keep the buy signal? And then can we turn the corner higher? What you don't want to see is something like the 5-minute. The way the 5-minute handled the pullback today, no bueno. Price breaks under the 21, breaks under the 50, 21 crosses under the 50, you get a big momentum break. None of that points towards immediate continuation. What you're looking for instead is a little bit like the 30-minute squeeze from yesterday. We got the gap up. We pulled back into 30-minute support. Structure holds up. 30-minute squeeze. I'm getting the slingshot buy signal. Sets you up perfectly for continuation higher today. So for tomorrow's trade, Friday, and then early into next week, that, my friends, is the key. All about your lower time frames. Monthly charts are perfect, the weekly and the daily charts are perfect. If we're going to continue to trend higher in the short term, we got to handle pullbacks on lower time frames. So watch your hourly 21, and if things can hold up here, from there I think you look for your next lower time frame squeeze. 5-minute, 15-minute, some sort of compression to try to get that party going. And then of course, if we do break that 21 EMA, then given the fact that things are a little stretched on the weekly and a little stretched on the daily, there might be room for a bit more of a pullback. If we're pulling back into a bunch of 10 out of 10s, right, perfect structure, perfect momentum, the name of the game should continue to be buy the dip. So as always, thank you for watching. Hope you found it helpful, and we'll talk to you in the next one. Adios.
What's up, traders? This is Taylor from Simpler Trading. I wanted to thank you for watching our video, and if you liked the video, go on ahead and comment down below, hit that like button, and make sure you're subscribed and hit that bell icon to get a notification anytime we upload our next video. And of course, if you want to watch us trade live in real time with our own money, check us out at simplertrading.com. Until then, trade safe, and I'll catch you in the next video.